What if I told you that a hacker just stole $5 million from ZKsync with a few clicks? Or that Donald Trump wants to fill Fort Knox with Bitcoin instead of gold? This isn't science fiction. This is crypto in 2025. And today's Crypto Pulse gives you everything you need to navigate this wild market. Let's dive in. Hey, crypto family. Alex from Moonward Capital here with your twice-daily Crypto Pulse update. If you're new, we deliver the most critical market intel in just 6 minutes, helping you stay ahead of the crowd with actionable insights. Let's start with our market snapshot. Bitcoin is holding above $83,800 despite a slight pullback of 1.5%, while Ethereum is fighting to maintain $1,600 territory with a nearly 2% drop in the last 24 hours. The broader market is showing classic sector rotation with DeFAI absolutely crushing it, up over 20%, while privacy tokens are surprisingly down 3% despite strong mindshare. The Fear and Greed Index sits at 33.67. We're still in fear territory but recovering from last week's extreme pessimism. Our top story today, ZKsync has suffered a significant security breach. An attacker managed to compromise an admin wallet and mint 111 million unclaimed ZK tokens worth approximately $5 million. The team has confirmed user funds remain safe, but the token price dropped between 7 to 12% on the news. This is another sobering reminder about centralized control points in supposedly decentralized protocols. ZKsync is now implementing multi-party computation wallets and enhanced monitoring systems, with a detailed post-mortem expected tomorrow. Meanwhile, Mantra's OM token is attempting a comeback. After last week's catastrophic crash from $6.30 to just 37 cents, that's a 94% collapse in hours. OM has rebounded 22.76% today to 75 cents following aggressive recovery efforts. CEO John Mullen has proposed burning his personal token allocation to restore investor confidence, while the team deploys their $109 million ecosystem fund for buybacks. Despite being today's top gainer, OM remains 87% below its pre-crash levels. This recovery will be a marathon, not a sprint. Now for potentially game-changing news from Washington. Bo Hines, executive director of Trump's Digital Asset Advisory Committee, has proposed using import tariff revenue to build a national Bitcoin reserve. This unprecedented initiative could acquire up to 1 million BTC over 5 years, establishing Bitcoin as a legitimate national reserve asset alongside gold. This is massive. We're potentially witnessing the evolution of Bitcoin from a speculative asset to a strategic national resource. If implemented, this could fundamentally alter Bitcoin's risk profile and trigger similar moves by other nations in a new form of digital reserve competition. Let's rapid fire through other key developments. The DeFAI sector continues its explosive growth with 20.7% daily gains. Privacy tokens have declined nearly 3% despite maintaining strong mindshare. And yes, Fartcoin is still pumping, now at 86 cents with an $860 million market cap. So what does all this mean for your portfolio? First, audit your holdings for exposure to protocols with centralized admin controls and single signature wallets. The ZKsync breach is a warning shot for the entire L2 ecosystem. Second, consider your Bitcoin allocation strategy in light of potential nation-state accumulation. This could fundamentally alter BTC's long-term value proposition beyond traditional market cycles. Third, watch for the Trump token unlock on April 18th. That's $320 million potentially hitting the market, which could create significant volatility. That's your Crypto Pulse for April 16th, 2025. Remember, in this market, information is your edge, and we're here to deliver it twice daily. If you found this valuable, smash that like button and subscribe for more actionable crypto intelligence. I'm Alex from Moonward Capital, helping you navigate the future of finance. Is the ZKsync breach an isolated incident or a warning sign of systemic vulnerabilities in Layer 2 infrastructure? Let me know your thoughts in the comments below. See you in 12 hours with our next update. Until then, stay ahead of the crowd.